We are back. Thanks for sticking with us. With me now, I've got Mike Arnold, who is the Chief Technical Officer and co-founder at Path Trading Partners. One of the best technicians I know. He's also a friend. He's my business partner. And I want to bring him on now because, Mike, we're not even going to talk about macro. You don't care about macro. You're a price action guy. So let's go into the charts you've sent out right away. I mean, you want to look at NDX, which is a NASDAQ ETF or just indicative of the NASDAQ futures. So why don't we put up your chart? You can say hello so people can see your face moving and stuff.
Hello, everyone. Thanks for having me, Bob.
Yeah, let's do NDX. Let's put up that NDX chart, Jesus, when you can, and talk about what you're seeing in that first chart.
Well, NDX daily, finally last week, we had a double top, one of my favorite, double tops and double bottoms are one of my favorite reversal patterns. So double bottom for bullish, double top for bearish. We finally confirmed the double top, but we have not triggered it yet. It was confirmed on Friday. Even with today's rally, it is still in place. We could rally up in the NDX, NASDAQ 100 index to about 10,900 before the pattern is invalidated. If we do get a close below 10,370, it is triggered. And then we have targets around 10,020, so 10,000, 9,850, then 9,672. If you go to the weekly chart, what's interesting is we have another concept we use called the rotation zone, where we watch for pullbacks and rotations back up for continuation moves. The NASDAQ on a weekly basis, if this went to full target, would only take us back to the bottom of the weekly rotation zone and only prices that we were last at June 15th. So this is only correcting a little bit of the last move. Not a huge correction, but it is indicative also of momentum waning in the NASDAQ. So even if this continues to rally and starts moving more sideways, we do have major waning momentum. And this is the first time we've really got a pattern that's broken the daily rotation zone. The last couple, like we had a sell on June 23rd that actually just went to the bottom of the daily rotation zone, then rotated up very, very strongly to help form this double. I also put out charts.
We've got the weekly chart up. So explain the rotation zone really quick so that people
The rotation zone on that weekly chart would be to the bottom. The top yellow line is the first layer of support. The bottom blue line is the major level of support. So we'd watch for a pullback in there and then a potential reversal move back up. But you can also see, even if we got to that blue line area, that we're still only trading back to the highs of February before this sell-off occurred. So it's not wiping. What was that?
It doesn't take us into another bear market. It's just a rotation.
No, it's actually just correct. We haven't even had a normal correction since these lows in March. We haven't even had a pullback to anywhere close to the bottom of the NASDAQ rotation zone. What's interesting, I also sent over charts of Amazon.
You want to look at that now?
Sure, we can look at Amazon because Amazon also confirmed but not triggered a double top. And Amazon's actually acting pretty strong today, but it's still not invalidated the pattern. So Amazon's double top would only take us back if it went to full target, the higher probability target would take us back to 2,600. The second target, if we had a bigger pullback, would take us back to 2,500. And that's price action that, again, that's only retracing to the beginning of June. I mean, so that's not a huge retracement.
It's one of the things we've talked about a lot in the past is that some of these moves don't have to be catastrophic. It's just normal market rotation that almost solidifies specifically institutional buying, right?
Yeah, exactly. Even if these patterns triggered, at some point we need some kind of pullback, and we have to wait for the pattern to trigger, but we're definitely getting some changes in the core stocks that have been driving this. And I also put up a Microsoft chart, which is actually—
Take a look at the Microsoft chart.
Weakest ones right now, and that price action, if the targets again would take us back to about 190, then 186. And Microsoft, that would take us back to close to February highs before the sell-off and the bottom of the weekly rotation zone. So these would just be normal corrections at that point and not major severe corrections. It's actually work off some of this major overbought condition. They have not triggered yet. They've confirmed, but they have not triggered.
Let me just explain that really quick, and then people can, you can correct me if I'm wrong. When something is confirmed, that means the pattern is in its existence with the proper parameters around a pattern that you can get a measured move. When something is triggered, that means the pattern is now in effect, and it's a high probability that those measured moves are actually achieved. Is that correct?
That's completely correct. And a lot of people, where we separate ourselves with a lot of our systems and trading stuff, is we actually have that dual layer where a lot of people would normally trigger it when we confirm it. But especially in these kind of markets, when you trigger it before it actually triggers with our systems, it can lead into some catastrophic results because many of them have been stopping out just off the confirmation and they never actually trigger.
So you're also the chief portfolio manager at the stockthinktank.com that we are partners in, full disclosure. You can find that at the stockthinktank.com. You got us long gold June 1st.
Yep.
So what do you see in gold right now? And Jesus, if we can put up that gold chart, that'd be great.
Gold is getting, we are long, as you said, it is getting quite toppy. We just went through our major target areas, which were about 1960 to 1962. We've traded through them today. The next ones, if I update it right now, real time, we'd be looking on a continued rally. We're up to 1990, then 2010. Now this is very overbought. We are aggressively trailing a stop because I am looking for an exhaustion pattern this week. And then that's where we start watching for a nice pullback in gold. We'll still remain very bullish in gold, but it is extremely overextended. And if it were just to return to the weekly top of the weekly rotation zone, we'd be only looking for a pullback to about 1860. So, which would be a great little area to reload. If it dropped below that to the bottom of the weekly rotation zone, we'd only be looking at a pullback to about 1780, which would be incredibly, if I could get a pullback to there, that's an incredibly bullish pattern. So short term, I'd like to see the pullback. We're waiting for actually a trigger for that exhaustion pattern. And then it's just pullbacks to these longer term key support levels and reload on gold. And silver is getting also extremely overdone and close to also triggering an exhaustion pattern.
Let's put up the silver chart, but I know you well enough to know the answer to this question, but I'm going to ask it so you can answer it. When you say, I was on BNN Bloomberg last week talking about gold, and I told them that I easily can see 2000. You just mentioned that our two targets kind of framed 2000. It was about 1990 and 2010. But if somebody has missed it, has not been in, the pullback is where you want to get back in.
You want to get in on the pullback.
Right, so let's look at the
I would not be chasing gold or silver at all here, because when it tends to get this overextended, we do get that really nice pullback. It's just trying to time it correctly. When you have, people are chasing it right now, and you don't want to chase this higher. Because when it exhausts, it can correct pretty quickly, and that's when you want to save your powder for.
So really quick, what do you think about silver specifically?
Silver, our targets were, we had targets of about 2470. Next major area is 2540 to 2553. And then if this does continue, next major target is 2692. What we're watching though is a key support on the weekly is all the way back at about $21 though. So this could easily return to $21, which would be a great area to buy. The area in front of that, if it doesn't get pulled back all the way, we're good. Next area we're watching is 2250.
So real quick, do you care about the gold silver ratio? And We're also along the euro since about June 24th. How are you feeling about that? We don't need to see a chart, just quick because we're running out of time. Give me answer those two questions and then tell everybody where they can find you.
I do care about the gold silver ratio. I'm going to be, once we do get a pullback in gold and silver, I'm going to re-baseline it and then figure out how we're going to weight the portfolio appropriately between the two. In terms of the euro is also getting very, very extended. We are long the euro in the portfolio, and it's with a trailing stop, and we're getting more aggressive with ratcheting up that stock because of the recent price action, especially with the explosive move higher last week.
Mike, where can people find you, please?
They can find me at pathtradingpartners.com. They can also follow us on Twitter at path_trading. Those are the two best ways. They can email me at support@pathtradingpartners, and I will take a look at those emails. Also, we do have a YouTube channel. We put out videos every day, free videos for people to help with learning technical analysis and some price action trading.
Yeah, if you like the price action stuff, Mike just pointed out, a lot of it's going to be on his Path Trading Partners YouTube channel. Mike, thank you very much.